Hey there, Bigger Pockets. It's Matt Faircloth, and I am excited for today's conversation. Today, we're going to talk about crowdfunding. And I've done a lot of deal syndications and raised money for projects and whatnot over the years, but I've done that all through my network and the network of my network, and done it that way through pre-existing relationships that I have. But one thing I've never done is raise money through crowdfunding, and that I think is the wave of the future. I think that give it 5-10 years and people are going to come out and find investments, whether that be buying a share of a stock or buying a share of an apartment complex. And I think that those two are going to become, the latter will become more readily available to more and more investors and people that just want to simply build their wealth. They don't want to do this full time like a lot of us do. They just want to build their wealth through investments. And up until now, those investments have only been available pretty much on Wall Street or through a financial planner. But I think that crowdfunding is going to be an absolute game changer for those of us in the real estate industry. And I am very lucky to be sitting here with a good personal friend of mine, but also a thought leader in the crowdfunding space. This is a good friend of mine, Jeremy Browner, who's also an attorney in the state of North Carolina, and he's done some white papers on crowdfunding and has done a ton of research on the subject. And Jeremy, I want to thank you for spending a little bit of time to talk about crowdfunding with our audience here.
My pleasure to be here with you tonight.
So, real simple, what is crowdfunding?
Well, crowdfunding essentially is being able to harness the power of the internet. You take a lot of people with little investments, so the power of the crowd, and you funnel it through a funding portal, and you have funding a project. Up to $1 million per year.
And that could be a real estate project, it could be a startup of a pharmaceutical company or whatever it may be, but it's going to be something that's a project that's looking to raise investors. And up until now, they've had to do that through things like IPOs or private placements or whatever.
And all those require lots of money paid to attorneys.
Yeah.
So what Congress did, it asked the SEC, the Securities and Exchange Commission, to create rules that exempt the issuers, the corporations, the LLCs that want to issue these types of stock, creates an exemption to the Securities Act of 1934. And that allows you to have very short filings. There's still going to be a small amount of filing involved, but you don't have to have a whole registration, have a team of attorneys, security attorneys. So it's going to bring the ability to raise money from the masses to the common person.
Great.
You know.
Now, the crowdfunding conversation has been around for a while for real estate investors as well, but I've seen the projects that I've researched to be very, very large projects. I looked at some that were like, people looking to raise 30, 40, 50 million dollars, and they were excluded for only investors that are accredited. I know there's certain income qualifications to be accredited, but I think you've told me that the rules have changed around that.
Yeah, so for a couple years, crowdfunding has been available for accredited investors. Those are wealthier investors. And starting on May 16, 2016, crowdfunding is now available for non-accredited investors. So you can raise money up to $2,000 per year, or 10% of your income, whatever's less.
The investor can contribute up to $2,000 per year.
Yeah,
got
the
it.
non-accredited investor towards a project of their choice.
Now, what size projects, if I'm a sponsor, let's say, of a project I want to put out there, let's say it's a 10-unit apartment building, what size project, like how much money am I limited to raising through
So
these
it's up to $1 million, but inside that $1 million cap is 3 tiers. The first tier is $0 to $100,000. The second tier is, of course, $100,000 to $500,000, and the third tier being $500,000 to $1 million. And depending on which tier you pick, you have to do more financial analysis. For instance, the $500,000 to $1 million requires an audited financial statement. So you have to get an accountant involved, they have to audit it, and that is, another expense towards the raise.
Yeah, all things good to know. So that's great. Again, guys, I think crowdfunding is absolutely going to change the conversation for real estate investors. For those of you that are out there that have some track record, that want to learn how to do this a little better, crowdfunding is, I think, the place to go. So this is going to be out on Bigger Pockets, so I'm going to encourage my good friend Jeremy to set up a Bigger Pockets profile so he can get into some conversation with you guys in the comments below. I'll hop in too. Jeremy, for the folks that want to reach out to you for any further questions about crowdfunding, how do people get a hold of you?
Sure, I have a website. Of course, my law practice is in Chapel Hill, North Carolina. www.brownerlaw.com. That's the color brown from the E-R and the N, law.com.
Good. And Jeremy and I have known each other since we were 3 years old, by the way. So that's also a good personal friend of mine that I thought would offer up a great conversation to my folks on Bigger Pockets. So hope you guys enjoyed. Thank you so much for watching. I look forward to hearing from you.